We have an interesting topic today, which is what happens when you inherit an already inherited retirement account, meaning you're 2 steps away from the person that passed away. So person passes away, their beneficiaries move it into an inherited account, but then you are the beneficiary of that beneficiary and it steps down to you. There are very special rules that you have to follow to know when you have to take distributions, if you have to deplete that account, and do you have to take that decedent's RMD that we're going to cover in today's video. When you are the beneficiary of an already inherited retirement account, you are considered what's called a successor beneficiary. One piece of information that's going to be very valuable that you'll need to know is the original beneficiary that inherited that account before you, did they inherit that account from someone who passed away before 2020 or 2020 or later that person passed away? Because the IRS changed the rules back in 2019 when they passed the Secure Act, which will then influence what distribution rules you are going to have to adhere to and what your options are. The reason why that date of death of the decedent matters is because if the decedent passed away prior to 2020 when the original beneficiary received that inherited account, they would be subject as a non-spouse beneficiary to the stretch rules, where if someone inherited a retirement account from someone who passed away after December 31st, 2019, that non-spouse beneficiary would most likely be subject to what's called the new 10-year rule. I'll start out by reviewing an original beneficiary that was subject to the 10-year rule. So this is someone that inherited a retirement account from a decedent that passed away after December 31st, 2019. So non-spouse beneficiary inherits the account. They move it over to their name. They have to deplete that account within 10 years, starting the year after that decedent passed away. So let's say father passes away. The beneficiaries are the kids. Father passes away in 2020. The kids have 10 years starting in 2021 to fully deplete that account. So that means their accounts have to be depleted by 2030. But if one of those beneficiaries pass away while they're in their 10-year rule, they have beneficiaries listed on their account, which are the successor beneficiaries, which is what we're addressing in this video. So if let's say one of the kids makes it 5 years into the 10-year period, they pass away. Now that Inherited IRA passes to their beneficiaries, those new non-spouse beneficiaries do not get a new 10-year rule. The way the IRS wrote the rules is they said, hey, if you inherited an already inherited retirement account as a successor beneficiary, you get whatever left in that 10-year rule. So example, child passes away, they use 5 years. That successor beneficiary only has 5 years left to deplete that retirement account that was inherited from the original beneficiary. In addition to having to potentially deplete that account within that 10-year original time frame, you as a successor beneficiary may or may not have to take what's called a RMD or a required minimum distribution from that account each year for the time that you own it. But it's going to largely depend on, did the original beneficiary of that account also require to take an RMD based on the makeup of who they inherited from? And I'm going to explain. We have to go back to the decedent for this rule. So if the decedent who originally passed away had a pre-tax retirement account, traditional IRA, and they had already passed what's called the required begin date for RMDs. So once you reach a certain age, and it varies based on your date of birth, if you're the original of the account, the IRS says, hey, you have to start taking small required minimum distributions each year. If that decedent had already reached that required begin date, requiring them to take an RMD out of their retirement account, when the original beneficiary inherited that account, that would then pass to them. They would be subject to the 10-year rule, also required to take RMDs each year during that 10-year period. And if they don't make it through their 10 years, then the successor beneficiary is subject to that same requirement. Say you got to take those small RMDs in addition to finishing out that 10-year depletion cycle. However, If the original beneficiary inherited, let's say, a Roth IRA, which doesn't require RMDs, or they inherited some type of traditional IRA where that decedent passed away before the required begin date, let's say they passed away at 65, not requiring them to take an RMD, then that original beneficiary didn't have to take RMDs, nor does the successor beneficiary as they finish out that 10-year period. We've covered two items. The successor beneficiary has to be aware of the 10-year period. They have to be aware of potentially having to continue RMDs, required minimum distributions, based on the beneficiary. There's one more item that the successor beneficiary has to be aware of, and that's the question of, is that beneficiary that you passed away, that you inherited that retirement account from, did they take their RMD if they were subject to it in the year that they passed away? So here's an example. The original beneficiary had this inherited IRA account. They were in year 5 of the 10-year period. They were required to take, let's say, $2,000 out of that retirement account to satisfy their RMD. But they passed away in January before they took any of their RMDs out of the account. You as a successive beneficiary would have to know that before 12/31 of the year they passed, you have to take out that $2,000 that wasn't distributed to them, and then your RMDs would begin the following year. It's called the undistributed RMD of the decedent. Let's bring this all together in an example. So if you are inheriting an already inherited IRA from someone, the first question that I would be asking is, okay, when did the original decedent pass away? If the original decedent passed away after December 31st, 2019, and that original beneficiary was a non-spouse beneficiary with no exceptions to the 10-year rule, that non-spouse beneficiary would have been required to deplete that account in 10 years, and the clock starts the year after the decedent passed away. So how far did that original decedent make it in their 10-year period, and how much time do I have left, because I don't get another 10 years. I'm basically just going through the remainder of those 10 years. If they made it to year 9 and they're like, all I have is 1 year left, that means I have to fully deplete this account in the final year as a successor beneficiary. The other question I have to ask is, when did the decedent pass away? Did they pass away before they hit the required begin date for RMDs, which could have made that original beneficiary subject to having to take RMDs during that 10-year period? And if that original beneficiary was taking RMDs, that means that responsibility continues on to me to take those annual RMDs each year. And the third question being, in the year that our beneficiary passed away, the person that you inherited that account from, did they satisfy their RMD for that year? Or do I have to go in and take their undistributed amount before December 31st of the year that they passed away? There is a short exception list to original non-spouse beneficiaries subject to that new 10-year rule. So even if the decedent passed away after December 31st, 2019, there's a possibility that if it was a non-spouse beneficiary, they may not be subject to the 10-year rule, but it's a short exception list. The exception list is basically, did the person that inherited, are they the surviving spouse? Was it a non-spouse beneficiary that was not more than 10 years younger than the decedent, someone who was disabled, chronically ill, or in some situations, a minor child? If they qualified on that short list, then they get to qualify under the stretch rules, which then change your rules as a successor beneficiary, and I'm going to explain the stretch rules now. I keep mentioning these stretch rule beneficiaries. What are they? So a stretch rule beneficiary is someone that inherited, that may be a non-spouse beneficiary, that inherited an account from a decedent that passed away prior to 2020. So they had special rules that said under the old rules, if you inherited one of these inherited IRAs or inherited 401ks, the way it worked is they didn't have a 10-year rule. They had said they could roll over the balance of their own inherited IRA, and all they had to do was take small requirement of distributions over their entire lifetime, but there wasn't this requirement to deplete the account. That's the old rules. Now, if you are the successor beneficiary of someone that had one of these inherited IRAs that was a stretch rule beneficiary just taking their RMDs, you are not grandfathered in saying, oh, I get the stretch too. Like the way it works is if they were under the stretch provision and then you're their beneficiary as a successor beneficiary and you're a non-spouse, you automatically convert over to the 10-year rule, but you get a fresh 10 years. So I have someone who, let's say, an inherited retirement account from someone back in 2018, they moved the balance in an inherited IRA over their name. They've only been taking the small requirement distributions each year. They now pass away and I'm their beneficiary on the account. I roll that account over to my inherited IRA, but then I have to deplete that account within a 10-year period. While the IRS made these rules very complex for successor beneficiaries, here are some of the general rules. Number one, if the owner of the inherited IRA was subject to the stretch rules, you as a successor beneficiary are now subject to the 10-year rule. Number two, if the owner of the inherited IRA was subject to the 10-year rule, you have whatever time is remaining within the original 10-year window to deplete that account balance. And number three, whether or not you have to take an RMD in the year they pass or in future years is really complex, and you should really seek professional help to figure out the RMD strategy. I hope this video was helpful. If you have any questions, please feel free to reach out to me at greenbushfinancial.com. Thank you.